Good morning, Jags. This is Fahad. Today is Wednesday, January 20th. Let's get started. A quick thoughts on the market, real quick, first, which is that today is likely going to be driven by whatever Biden is going to do this afternoon. What's most likely to happen is that Biden will have his oath ceremony at exactly 12 o'clock noon Eastern time. After that, he is going to walk back to his Oval Office, and by 1 o'clock or 1:30 in the afternoon today, he's going to start signing the executive orders. Now, we do not know exactly what kind of executive orders will come. The list was originally only 3 to 4 executive orders to launch, but now I'm seeing some Bloomberg articles reporting that as many as 15 different kind of executive orders will be signed, and it could be much bigger list than that. But his target here is to strike immediately and start reversing every single policy that was put in place by Trump in the past 4 years. So he is going to immediately sign an executive order on the on basically stopping any kind of funding for the border wall around Mexico border. He's going to sign an executive order to, to re-sign the partnership with the European countries for the Paris Climate Exchange or Paris Climate Accord that was in place. Maybe he will do something with Trans-Pacific Partnership as well, which the U.S. had pulled out previously. He's probably going to go back into that. Maybe he will also sign an executive order for re-entry into World Health Organization, which I always thought was ridiculous that we pulled out of that in the middle of the pandemic, which made absolutely no sense. There's also already, he has not even taken an office, he has already actually sent an immigration bill to the Congress, effective this morning, and there's going to be very quick proceedings on that. My point here is that a lot of the stocks that are likely to move this afternoon is going to be based off of exactly what kind of things that he is going to sign the executive orders for this afternoon. So that's going to be the breaking news one after another. So watch out if there's going to be any specific plays related to that. One stock that I can tell you that I think will be in play today most likely will be FSLY. FSLY. Yesterday, we pointed out in the chat room that we started to see some increased amount of call option activity. I showed this chart briefly in Telegram this morning. This stock has a very nice cup and handle formation. So this is a large cup and this is a handle. This thing is going to gap higher by about $2 or 2 to 3%. Watch this thing around $100 per share because this is a major VOP resistance level. It's going to start attacking that $100 resistance today. If it breaks out through that, then there's a big air pocket and this big giant gap that's open all the way to $120 per share. Naturally, as you know, that Fastly used to get about 10% of its total revenues from TikTok, which was labeled by Trump as a national security threat in the United States. And as a result, that piece was broken up from the company and was then individually sold to bidders in the United States. And I believe Walmart bought a small partnership interest and some others. I don't know if today's executive orders will necessarily be an indication that TikTok will be allowed to operate as normal in the United States, but at a minimum, as these events start to happen, I could see this thing basically start to run strongly on basically on a view that we're not going to have those kind of threats to the businesses as we used to see in the past. All right, so watch this stock fastly, see if it starts to break out through $100 resistance. Now, with that said, I have an update on one particular theme that we had talked about in the Jaguar outlook, the first quarter outlook, which applies to a bunch of different stocks. Number one of those stocks is definitely INSG. INSG, as you can see, this thing was spiking sharply higher yesterday, and now it's once again in pre-market is expected to gap high by about 4%. So it's now trading above $18 per share, more like 5% higher in pre-market. But then along with it, we have also discussed CASA systems, CASA, which is also in the same space, benefiting from the same trends and hitting a new 52-week high yesterday, and then DZSI. Now the Jaguar clients, DZSI. The Jaguar clients, the pro clients that have been in the chat room with me, they know exactly what the stories are and why on all three of these stocks, I continue to press my bull case and I expect material upside in all of them. One element that I would like to point out is that now we know exactly how the C-band auction, which just closed yesterday, ended up being. It is very, very strong. So some quick background over here. The long anticipated C-band spectrum auction kicked off last week, offering 280 megahertz of a spectrum with 5,684 licenses available. The first week wrapped up with 12 rounds of bidding as gross proceeds surpassed $3.7 billion by last week, Friday morning. Last month, Verizon, being trying to be as aggressive as it possibly could be, they even issued $12 billion of corporate bonds in order to raise cash so they could become an aggressive bidder for the C-band spectrum auction. Now, that auction is now complete. And we have some notes coming out from Citibank this morning, in which they say right over here. Oops, no, sorry, not over here. Give me 1 second. Um, right over here. This is the note that came out from Citibank this morning, in which they say the C-band spectrum auction tracker clock close bidding concludes at almost $81 billion. The clock bidding phase of the C-band auction has ended the total gross proceeds of $80.9 billion. After 97 rounds, which was more than twice our previously published base case expectations. So 38 cents per megahertz versus 94 cents per megahertz. Basically, the total amount was expected to be about $35 billion. It ended up becoming almost $81 billion for the total, the C-band auction. With the clock phase complete, the auction now enters into the second phase, or the assignment phase, during which winning bidders will have the opportunity to bid for the preferred combinations of frequency specific license agreements. We expect the auction to fully conclude and for bidders' results to be released over the next few weeks, late January or February. Now, why do I bring all of this up? And by the way, T-Mobile and Verizon are the two biggest bidders in this auction. Why do I bring all of this up? I bring this up because this is hard to connect the dots for many people, but this is exactly what's driving this strength in CASA systems, CASA. This is exactly what's driving strength in DZSI right here, and then most importantly on INSG, INSG. Now, we have recommended call options in all of them. And anybody who bought the Jaguar fourth quarter outlook, which is right over here, knows exactly the bull case that, not fourth quarter, the first quarter outlook, knows exactly the bull case that we presented in these names. Why? Because we talked about fixed wireless access. And the fixed wireless access has to do with the rural digital opportunity from these auctions that are taking place. Historically, a significant part of these auction proceeds were awarded to companies that were working on different kinds of spectrum technologies to build in the future. But now what we are seeing is that significant portion of these are going to actually build out the fixed wireless access, which has become the most cost-effective way to bring faster connectivity to households rather than depending on 5G build out, which is extremely costly and time consuming and requires a very dense network of small cells and such. This is exactly why INSG is running the way it is. This is exactly why CALX was discussed by Jay in Weekend Research on December 13. This is exactly why CASA Systems is running strong, and DZSI Incorporated is also running very, very strong. Now we know that the spectrum is going to close with more than twice the original proceeds that was expected. It's still very, very positive. We will know who the final bidders are going to be, and this thing is going to probably settle out over the course of next 2 to 3 weeks. And during this time, I expect these stocks to continue to power higher. That is CASA Systems, that is INSG, and that is DZSI. This was all discussed in the Jaguar first quarter outlook. So take a look at that, and then you will be able to basically understand exactly what the background is and how to connect the dots with the C-band spectrum auction. And that's it from me. Let's go to Jay. All right. I don't know if Jay is still here. Let's go to Chronicle.
Morning. I have an update on Halliburton following their earnings yesterday. Some of our subscribers are currently long this company. So first off, the company posted solid Q4 results, revenue of $3.2 billion versus consensus 2.98.
I'm
Uh,
sorry, Chronicle. What stock was that again?
Halliburton,
Halliburton.
ticker
Yes.
HAL,
Yeah.
and EPS of 18 cents versus consensus 15. And under the hood, it was really the company's completions and production segment that drove the results, with revenue there increasing 15% quarter over quarter, and management seeing higher activity across multiple product lines in North America, which saw a 26% sequential increase. But what I really wanted to emphasize was that the liquidity and free cash flow picture continues to be strong. Like they have about $685 million of debt maturities this year, but that shouldn't be a problem because the company retained access to a $3.5 billion 2024 revolver, and they also have roughly another $2.5 billion of cash. So total liquidity is currently about $6 billion there. And they were able to generate $380 million in free cash flow in Q4, and that's after paying out $40 million in dividends. So all the restructuring and layoffs that they've done during the pandemic, that's beginning to pay off now as the outlook continues to improve, and they're in a strong position to capitalize on any drilling recoveries going forward. And on that note, regarding guidance for 2021 that was provided during the conference call, management said that they're expecting completions activity in North America to continue improving in the first half of this year. Currently, if we look at total US oil rigs that are operational, that's still roughly 60% below pre-pandemic levels. So there's still a lot of further sequential recovery to be captured there. Within drilling and evaluation, they're starting to see margin improvement, and their expectation is to get to double digits by the end of this year. And then CEO Jeff Miller said that within production, the company is seeing good momentum. Meanwhile, CapEx is going to stay flat for the year at $750 million. And then, of course, from an operating perspective, we have last year's cost cuts, which will result in benefits through this year. So all of this should bode well for free cash flow here, which is why CFO Lance Loeffler said that he now expects free cash flow to more than double in 2021. So putting all this together, I think Halliburton is in a much stronger position than their competitors in this space. And lastly, in terms of post-earnings analyst action, Stephens upgraded the company to an overweight this morning, and then Cowen upped their price target to $32 from 28. And Susquehanna and JP Morgan were also upbeat in their notes, although they didn't really change their ratings and price targets. But the key thing here is that sell side is slowly coming around to the idea of bottoming fundamentals and completions and drilling activity rather than just focusing on storage.
Excellent update. I will just add my quick thoughts over here, just reiterating exactly what I said in webinar yesterday. There are two types of investors and analysts that are out there. Both of them are completely non-believers in the oil recovery. One has to do with the cyclical trend, right? There's a very large section of the investor space out there, as well as the analyst community, that are simply not warming up. They don't even actually recognize that there's a potential bottoming and a recovery taking place in the energy sector. Why? Because on headlines, they still see basically all kinds of lockdown situations everywhere, even though the price of crude oil is starting to tell them that itself that the mobility is starting to improve gradually, and the manufacturing rise and manufacturing PMIs is also supporting that growth. But they're not believer in the cyclical recovery. They will eventually become the believer after a long time, and by that time these stocks will have gone much higher. The second thing is this: there's a whole secular segment of the investor space out there that don't want to touch the energy sector, because all they basically look at is the future is going to be driven by green energy. I don't discount that argument. I do believe green energy is going to become a bigger and bigger part, solar, wind, and electric vehicles, and all of this. But to suggest that it's going to so much disrupt the energy sector that oil will forever go away, that I just don't buy that into an argument. I think even in 10 years from now, cars will still be running on oil, despite having a large section of electric vehicles, and there's going to be still a lot of oil that's going to be produced and being used. So my point here is this: I think the recovery in these stocks will continue for more time to come, and ultimately, I believe, purely technically speaking, Halliburton is going all the way back to $40 per share. Not an immediate trend. It's going to take a while, gradual rise from here, but I believe that's the direction. $40 per share is where the stock is heading, especially with the view that you just presented that free cash flow will double in 2021. All right. Now, with that said, let's go to Jay. Jay, are you there?
Hey, Fahad.
Hey.
All right, so last week, a company called Impinj, ticker PI, they announced Q4 preliminary numbers where revenue came in at 36 million, which is well above their guidance of 26.5 to 28.5 million and the 27.5 estimate. Canaccord Genuity was out saying that they believe the revenue was driven by a rebound in retail apparel volumes. And for those that do not know, Impinj is a manufacturer for RFID applications with nearly 50% of the market. RFID is essentially item identification and inventory tracking technology. Now, this leads me to a company called Avery Dennison, ticker is AVY. This company does have an RFID segment, which falls under the retail branding and information solutions segment. BMO Capital noted that Avery was 31% of Impinj's total revenue back in 2019. Last week, they were out with a note after a BMO event saying that Avery's Dion Stander, who is heading up the RFID business, noted that the number of new engagements in the apparel segment for this RFID platform was up over 40% year over year, and this compares to 20% in recent years. So it's showing an acceleration of interest. Equally important, Mr. Stander indicated that the non-apparel based piece of the market was seeing an even greater level of engagement at roughly 60% growth. So BMO expects to hear more about the growing interest beyond apparel throughout 2021, with momentum behind beauty hitting a scale that will move the needle, but also a growing push in food. Avery indicated that it has seen numerous pilots initiated on the quick service restaurant side of the equation around labor efficiency and inventory management, but food safety and management of high value inventory are additional drivers. And then Avery is also right now in small pilots around the healthcare front, which seem to have application benefits around patient safety, cold chain use. So Impinj's preliminary numbers should be a positive read through for Avery Dennison. And this company historically reports right at the end of January, but there's no confirmed date yet.
Great stuff. Love this pitch, actually. And I think that the idea of connecting the dots from PI to Avery is right on the mark over here. Now, AVY will be reporting earnings. I believe it's the last week, so next week sometime, January 27 or 28. I'll check on the specific date. But here's another way of technically looking at this chart. As you were talking, I pulled this because a simple view here on Avery Dennison, you can see that after 2 months of consolidation, we had a high volume, powerful breakout at the start of the year. The stock jumped sharply and then basically went into a new range of consolidation between 155 and 163 on lighter volume. MACD and RSI both improved during this time. So this 155 level, which was previously resistance, is now major support. As long as that holds, I think the path of least resistance is still higher, and I would expect this stock to continue to make higher highs and higher lows. And based on 60% growth, if I heard that correctly, that you just pointed out, and the read-through from PI, we should see a blockbuster quarter from this company next week. So I'm looking actually to make a play myself on this one based on this discussion. So great stuff, as usual. All right, folks, we're going to stop over here. Thank you very much for joining, and we'll see you in the chat room shortly.